to be resistance. And then if you go up, there was a ton of consolidation for about a month that occurred just around 30,000, and that is going to be major resistance. So But again, price is always king. Charts are always truth versus emotion. And I think we always have to remember that whether you're a bull or a bear, price and price charts are what's going to give you the clearest signal. So we saw the break of 20,000 just this past, really this past weekend. And the key here is to understand why it broke 20,000, because there were a lot of people saying, hey, 20,000 is the low, and by the way, they all came on once we got to like 30, they all piled on the bandwagon. But the bottom line is when you have everyone calling for a low of 20, you have a lot of people putting stops just under 20. And it's the tendency of a market to run those stops, make people freak out, make the weak hands exit, and then you finally get a short-term bottom. And I think that's what we have here on Bitcoin. And again, I want to show you a couple things of why I think it's a bottom. So we're going to turn over to the charts here. And what you can see here is that we had this collapse from about 40,000 down to about 26 or so, 25 and 26. That move down of 14,000, it's about $14,000, was replicated perfectly with a measured move down to about 17,500. So that's a measured move. That gives you a good basis for a low. In addition, if we take a look, we know that the January or the December 2017 high, that was a major level. We have now recaptured it after just piercing it briefly, so we know that's support. And then even one more little tidbit of great technical analysis is that if you take the low from March of 2020, which is the low from COVID, which was the lowest point going back to quite a while on Bitcoin, that was around $4,000. And if you connect it to this recent low and you drag a parallel line up, you get the two highs from last April as well as November. So there's a confluence of technical supports right here that signal to me at least we have a bounce here probably to 25 to 30,000 in the cards. Start to say, hey, we have a major low in Bitcoin, and you're going to see the bulls come back with a vengeance, trying to say, okay, now we're going to start heading back up to all-time highs. I think that'll propel it over the next probably 3 to 6 weeks back to 25 to 30,000, which again, from 17,000 as a low or 17.5 percentage-wise, that's massive. Now, if you're in from 60 or 65, that doesn't seem such a good bounce. But again, in percentage terms, that's a major, major move. Now, once we get there, unfortunately, I still see more downside. I still think that we will likely head down to probably about 12,000, which is my second price target on the downside. Long-term bull on Bitcoin. In fact, when we broke 20,000 at 19, I announced that I started my beginning hodl position. And so ever since we were at 65,000, even though I was bearish, I was always saying, hey, listen, long-term, I think there's a huge place in the economy, in the world for Bitcoin. And I think we'll get there. We'll get to 100,000, 500, maybe $1 million. It's just you have to flush out all the weak nonsense. I think last time we talked about that Darwinian concept of only the strongest will survive, and you just have so much crap in the system, frankly, right? So the idea here is that in the near term, a bounce back to 25 or 30. The reason 25 is a key level is that is your low from the Terra Luna collapse. So that is going to be resistance. And then if you go up, there was a ton of consolidation for about a month that occurred just around 30,000, and that is going to be major resistance. So it's hard for me to imagine with the NASDAQ, even though I expect bounces there, I still think the NASDAQ's headed a lot lower, at least to the COVID highs, that the Bitcoin market would bottom just yet fully. So I still think we need to wash out more of the weak-handed Bitcoin, the cryptos, and that will finally give us later this year a big point bottom.
All right.
3 years out, I think we're back to 65. So I do think there's a decent chance that we're back to 65 within 2 or 3 years. I think this next 6 months or so is going to be the hardest. Then we'll bottom out, and then you'll probably have another 6 months of sideways chop. If we look at past cycles on Bitcoin, it's usually that first year down, and then you get a sideways kind of choppy where the bulls and the bears are just battling it out for a period of time, and then finally you start to get that move up. And I'm still a believer that inflation is going to be a systemic problem, maybe not at 8 or 9%, but at 5%. And I still believe that when the economy economy really tumbles here, and I'm starting to see the signals of that eventually the Fed will say, okay, we have 5% or 4% inflation, but we have 10% unemployment. We now need to print again, which is going to be another positive for Bitcoin. So again, there longer term, lots of positives for Bitcoin. I don't think it's going away. I don't think it's going to zero ever, but ultimately you just have to weather the storm essentially. The Fed being accommodative again is that the economy is going to get so bad that they're forced to, which may not necessarily make for a new massive bull run in stocks. Like I don't think the S&P or the NASDAQ are going to hit new all-time highs for years. I think we could be in a scenario like the NASDAQ was in 2000, where when you finally dumped out, it took about 15 years to make new all-time highs. But I think Bitcoin will get there a lot sooner because it's not an economic play, right? So if the economy is suffering, if you have this systemic kind of bear market longer period, that's bad for stocks. But Bitcoin, because the printing presses will start up again, that would be ultimately a bullish scenario for Bitcoin. Yeah, absolutely. Absolutely. So it may just take a little bit longer. I mean, everyone wanted that instant gratification when we were at 69. Everyone was calling for it by the end of November last year. The markets just don't work that way. When everyone's on one side, they're going to flush out everyone and try to get everyone to kind of give up. But eventually the asset makes sense, right? We need it in the world we live in with the money printing, with the Federal Reserve and the central banks and just kind of the inflationary environment. So it is going to 100 and it is going beyond. All we can do really is look at past cycles. And now let's be clear. And I think I even saw a comment on the question that you asked on Twitter that got people to ask questions, where they were saying, you know, you have to recognize that this is a different environment. Bitcoin has never been through a massive hiking environment with no stimulus coming into the system. So it could take longer, but past cycles have shown us it bottoms after 12 months. And with in the next 6 months, so 18 months out, it starts to chop. And then you get that next bullish run between 18 and 24 months. So the idea is, you know, within 2 to 3 years, I think you're likely back a 2 or above the 65, 69. It's important to recognize that it's very possible we go below 10,000. All right. You know, one thing I've learned in my trading career of stocks and commodities and now crypto is that assets go much further to the upside than anyone thinks and much further to the downside. I would say that you would prefer not to see the lows from 2018 and 19 taken out, which were around 3,500. Aside from that, this new unprecedented environment for crypto, because of the Fed and what they're doing, and they're pulling out money and sucking it out of the system, you have to expect that it could be a very rocky ride. So just to give you a sense of how I'm playing this, I started a hodl position at 19,000, just a small amount. I basically said to myself, what do I want to invest in Bitcoin over the longer term to just buy and hold? And I came up with a number and I divided it in 6 parts. And I took that first 6th amount of money and I bought at 19. And I'm going to basically put a buy level of that amount, 1/6 every 3,000 down. And so I'm looking at even potentially having some still buyable money even below 12,000, because I recognize from my history of trading that it can easily go below my lowest point. So I'm at a dollar cost average now, starting from 19, 16, 13, 10 and so forth, all the way down. We saw this with AMC when Wall Street Bets kind of did their runs and really bankrupted a couple hedge funds as well, is that in general, when you know that there's big institutional money that's going to be forced and that it's leveraged at certain levels, then the market is just naturally drawn to those levels to put maximum pressure. So for instance, I had heard that 20 to 21,000 was a key level for Michael Saylor and MicroStrategy's holding. Now I'm hearing that they came out and said, no, we can weather the storm lower and so forth, which is fine. But the key is you have to see more kind of big money that's leveraged kind of getting blown up. And you also have to see, I mean, again, I'm in the camp that 90 to 95% of all altcoins need to go to zero. And again, for that to happen, it makes a lot of sense that Bitcoin's going to have to go down lower than this, 17,500 level at this point to 12, maybe even below, before you wash out those kind of nonsense junk coins.
I guess this
negative news over the last 5 years. I mean, heck, COVID, look at what happened with COVID and the destruction. And then the Fed came out and printed more money than they ever printed ever before, almost combined. And the market's just ripped up to new all-time highs. So I think, honestly, I think when it comes to like Bitcoin, Russia doesn't really matter, Ukraine. I mean, all these things are secondary versus what the Federal Reserve is doing until we see Bitcoin kind of mature into more of a gold type asset. And again, it is going to do that. But remember, and I always say this now, is that Bitcoin is a 13-year-old, right? Started in 2009. Here we are in 2022. That's 13. You can't expect it to behave like gold, which is what everyone said ahead of time. Oh, it's a kind of a protection against the printing of money and all these things. 13-year-olds act erratically. It's a new asset. It's not mature like gold. Gold's been used for thousands and thousands and thousands of years. 23, we do enter a recession. I think the Fed, again, is being, as much as I was a fan of them never printing as much money, I think they waited too long to kind of start pulling back on it at this stage. And now honestly, they're going too fast. They're playing catch up. So that likely will push us into a recession. You add in high oil prices and inflation, and it's already hurting the consumer all over the world. But basically what I think is you get into a recession. Yes, that's going to put a little pressure on Bitcoin, but my guess is Bitcoin is already near the lows at that point, meaning it's 12-ish thousand or lower. And so there's minimal downside at that point. Could it go to 6? Sure. But when you're at 65,000 and it drops from $6,000, it's very, very small. Percentage-wise, it'll be bigger down here. But again, my at least for what I'm doing, and I can only speak to what I'm doing, is I'm looking at the bigger picture now as we get in these lower levels to where it will be in 3, 5, 10 years out. And again, I've talked about how the chart, and this has played out perfectly, David, and you guys know, we compared the Amazon chart in the dot-com bubble to the Bitcoin chart in the last year, and they are almost identical. And we know the dot-com bubble burst. I think that's what's happening with crypto here. And remember, Amazon went from about $112 to about $6. So that's about a 90+% drop, maybe close to 95. Bitcoin maybe does that. If it does that, think about where Amazon went afterwards. It went all the way from $6 to about $3,000 to $4,000 a share. If you map that out on Bitcoin, there is massive, massive upside as it gains traction as kind of a safety gold type digital play.
Okay, final question.
So I think that the key is going to be right now, alts are still in favor. People still have faith in them. I do decouple Ethereum from other altcoins and even stuff like Cardano and Polkadot. Basically, the top 20, I look at the ones that maybe they can survive this. Everything else, I would say they will decouple very, very soon if they already haven't, and they likely won't recover when Bitcoin bounces enough, right? So when Bitcoin really starts to become that safer asset that kind of is inflationary in terms of protecting against inflation, I do think that the top 20 may survive and may thrive, but I would definitely be very careful about anything else because, again, folks, you have to look at these as use case. When lots of money's in the system, people will pump money into these things. They're not even going to give a second thought. Once you get in a bear market, it's really what's valuable and what's not. And big money is what's going to drive crypto in the future. That is absolutely going to be it. And they're going to look for use case that has real use case. Ethereum has use case. Bitcoin has the digital gold. It's really the only one talked about like that. Some of these others have good basis as well for use case. A lot of them don't have that. So be very, very careful with most of the alts. Quickly is because of stimulus, right? Every time, especially starting in 2008 and 9, the Federal Reserve printed an unprecedented amount of money, obviously culminating with the COVID collapse in March of 2020. So that's been why this market has been kept on life support for so long. The economy has been kept on life support is because you have this stimulus. It then triggers the retail kind of consumer, right? We always hear about consumer spending, and that's been what's driving this market. So my fear is that with inflation being stubbornly high for a period of time, it's not going to allow the Fed to significantly print. Now, as I said, I still think they're going to start again at some point when when unemployment gets to a certain height. But I don't think they can print to the same magnitude. And that makes me worried that we pulled a lot of the gains forward over the last couple years since March of 2020. And it's going to be kind of this stagnating economy, stagflation, where the market is kind of, you get this 0 to 1% growth in GDP. And without stimulus from the Federal Reserve, there's just no way to get us back to these highs. You're not going to have the earnings growth. You're not even going to have earnings growth, period, to get us back to these levels. So I think it's going to be a long trek here. Things have made a major pivot because of the inflation surging to the upside. And it's going to be a tough market. It's going to be a trader's market going forward for quite some time.
Okay.